Satoshi Nakamoto turns 50 years old. Shout out to Gen X. Jurassic Park becomes reality, kind of. And gamblers lost an estimated $600 million gambling on Bitcoin longs. This and more on today's episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, Buenos Dias, Morgen, and welcome to episode 211 of the Bitcoin Bulletin Podcast. 211 is kind of amusing to me because in most places in the United States, that is the police radio code for an armed robbery, and people certainly got robbed blind if they were the degenerate gambler sort, putting longs and shorts on Bitcoin during the wild swings we've seen for the second week in a row. Of course, last week was another wild roller coaster ride as well, but naturally, if you zoom out, here we are. We find ourselves on Wednesday, and Bitcoin is pretty much exactly where it was the previous Wednesday. So it's just in a microcosm, this podcast is just a really good way to remember to zoom out. Always remember to take in that big picture. And normally you need to zoom out more than just a week as well. I mean, they're saying look at like the last 4 years, look at all of Bitcoin's history before you just fixate on those charts up close and personal. But we're going to get into all of that in just a minute. First, I want to talk about something that isn't really Bitcoin related. And you probably saw the news that a company called Colossal successfully cloned 3 direwolf cubs and released that information this week. Of course, they're working on the woolly mammoth and even the dodo bird, but first came the direwolves. And we knew what they had named the first 2 direwolves, Romulus and Remus, but they released the name of the third direwolf, Khaleesi, just the other day. And boy, that upset some people, including one of the writers at Slate magazine who wrote an article just lambasting the name choice. The article is entitled, "Khaleesi is a bad name for a de-extincted direwolf," with the subtitle, "Come on, do you even know your Game of Thrones lore?" It was written by Dan Coy, and this was written yesterday. And he just completely lambasts the name choice as if it really matters, right? But he says things like, the character in the Game of Thrones has nothing to do with direwolves. She does not own a direwolf. She does not meet a direwolf. She has no connection to direwolves. Her house, as the title of the follow-up HBO series suggests, is not the House of Wolf. It is the House of the Dragon. A little bit later continues, if you are going to so embarrassingly fanboyish as to name your fluffy de-extincted monster after a Game of Thrones character, name it Stark. Goes on to ramble about that a little bit more, but says, but do not name your Game of Thrones inspired direwolf Khaleesi. That is both too nerdy and not nerdy enough. Well, this is amusing because this apparently prompted a phone call from Colossal, the company that cloned these wolves. And apparently they called and spoke to the editors because they had to issue a correction. And the correction stated that, and this is funny, that not only is George R.R. Martin, the author of the Game of Thrones series, a major investor in the project that led to the cloning of the 3 wolves, but he was personally involved in choosing the name for the wolf. So apparently, Slate knows more about Game of Thrones and what is appropriate than George R.R. Martin does. And this is freaking glorious. And it so reminds me of the 1980s movie Back to School. I think that came out in like 1986. And if you've never seen it, it's a Rodney Dangerfield movie. And he plays billionaire Thornton Mellon, who got rich as a plus-size clothing magnate. And for whatever reason, I guess personal reasons, he decides he's going to accompany his son, his estranged son, to college and enroll in the same school to keep his son from dropping out of college. Of course, he has no interest in getting a degree. I mean, he's a billionaire and he's just having a good time with his life. But so he hires like NASA to do his astronomy report, and he hires Kurt Vonnegut to do his report on Kurt Vonnegut. And of course, he gets an F. And the teacher is just reaming Thornton Mellon, Rodney Dangerfield's character out saying, I'll tell you one thing, whoever did write this report doesn't have the first clue about Kurt Vonnegut. And then later it cuts to Rodney Dangerfield on the phone, like, stopping the check to Kurt Vonnegut, something along the lines of, I'll tell you another thing, Vonnegut, you don't know shit about Vonnegut. It's just really funny because this is life imitating art. I tell you one thing, George R.R. Martin, you don't know shit about George R.R. Martin. So that's a major tangent, but I just found it really amusing, and it's something I just wanted to talk about. All right. We do have a lot to talk about that is Bitcoin related, but before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of block 891,709, and Bitcoin is currently ringing in at a US dollar price of $82,390 US dollars, about $300 to $400 off of where we were just last DCA Wednesday. And that means that every dollar that you convert into Bitcoin right now will get you 1,214 Satoshis, exactly 5 sats per dollar more than last DCA Wednesday. So close enough to where we were last DCA Wednesday. Of course, I always appreciate getting more sats, even if it's, it's going to be 100 more sats for $20. So that's really cool. But functionally, it's the same. And the reason that is important is because, so many people that claim to be Bitcoin maxis on Bitcoin Twitter were just absolutely capitulating this weekend. I mean, it was done. Stick a fork in it. We've seen a lot of this. As soon as Donald Trump got inaugurated, I mean, he hadn't been president for more than 12 hours when people were already calling him a liar and a cheat for not having immediately freed Ross Ulbricht the first second he walked into the Oval Office. And I addressed this then, that, the first half a day that a president is president, they're not doing anything. It's the ceremony of swearing him in, and they've got to be in the parade, and they got to pose for all their photos. It's a ceremony day. And then there's the inaugural balls. And you think of the inaugural ball, there isn't just one, there's multiple. So the president has to go make a little speech and dance for one dance or one song at each of these balls. Sometimes they're not in the same place. I got to go to the inauguration in 2005, George W. Bush's second inauguration. I was invited to the inaugural ball because at the time I was involved in a line of work that, I don't want to dox that too much right now, but I got invited to the inaugural ball. And at that point in time, I think there were like 12 inaugural balls, and some of them were at the convention center and some of them were at other locations throughout DC. But the point being, the president has to travel via motorcade to all of these different locations. So, I mean, I think Trump was going until 1 or 2 o'clock in the morning before he finally finished up at the final big party, the final big official party. So of course, the next day, he not only commuted Ross Ulbricht's sentence as he promised to do, but gave him a full pardon. So, that people had to eat a little crow on that. And then of course, people were saying that he betrayed us because he hadn't established the strategic Bitcoin reserve. But, we're talking April. So he got sworn in on January 20th. So February 20th, March 20th. It's been just a little over 2 months, but we already have the executive order establishing the strategic Bitcoin reserve. So he fulfilled that promise. I'm not fanboying on Donald Trump here. I'm saying I've been alive long enough to remember a few presidents, and none of them, well, they often never make good on their campaign promises, but oftentimes they don't until the very end of their presidency, and then only as a tease. Sometimes they don't even do that. Like, I remember the Clinton administration, most of his campaign promises, either he flat out violated, like he got elected promising to veto NAFTA and he ended up signing it. And that's kind of having some repercussions this week, not, to be quite honest. But the point being, they hold their campaign promises like, well, if you elect me again, they don't act on all their campaign promises within the first 2 months. So I think all the people that were just not cutting him any slack on that, I mean, we're talking hours of slack on Ross Ulbricht, for example. They didn't vote for Trump in the first place, I think. But I'm getting a little bit distracted. I need to get back to the vital statistics. We went over the block height, sats per dollar. Bitcoin's current price gives it a market cap of 1.64 trillion US dollars. That is exactly the same as last DCA Wednesday. And for those of you who value your wealth in shiny yellow rocks, despite the fact that the price of Bitcoin is about the same, it will cost you an extra 0.4 ounces, almost an extra whole half an ounce of gold to purchase just one Bitcoin. Will currently cost you 26.7 ounces of gold. So even though gold set an all-time record high when It was rallying the last couple days. It's since retraced. And of course, Bitcoin has regained a lot of its value as well as gold continues to trend to zero in Bitcoin terms. For those of you who value your wealth in pizza, one Bitcoin will currently purchase 4,607 large pepperoni pizzas from Papa John's. That is one pizza every day for more than 12 and a half years. Obviously, I've said this hundreds of times by now, but if I believe that if you have one whole Bitcoin and you decided you were going to make it your life's mission to spend that Bitcoin, but only on pizza and only buying one pizza a day, that because that's 12 and a half years is, well, that's 3 more halving cycles from now. And we, if we continue to see, well, I firmly believe we have not seen this halving cycle bull run yet. I've given the reasons why on multiple occasions. I don't think the bull run would, if it behaves anywhere similarly to previous halving cycles, shouldn't really get rolling until maybe this summer, later this summer, like more like July or August. I relate this to 2017 often, and remember, Bitcoin was was right about $1,000 per Bitcoin in January, but it stayed in, it didn't really get above 2,000 until like July, and then in August we saw it go past $4,000 per Bitcoin, and then it just exploded all the way to 20,000 per Bitcoin, and it did that primarily between the end of August, beginning of September, and the middle part of December. So we should expect to see something similar if history were to, not necessarily repeat, but at least rhyme. So anyway, we're going to see that potentially 3 more times, which means that the value of Bitcoin would have increased so much that right now it's 12 and a half years worth of Bitcoin. But when you get, 4 years into that, you're talking another halving, and then whatever the all-time high is, then 4 years after that, another all-time high. So the number of pizzas that you can purchase keep getting greater and greater as fewer and fewer Satoshis are required to buy that pizza. And eventually we're going to be talking not just 12 years, but 50 years, 100 years, 500 years, 1,000 years, where it'll be just functionally impossible to spend a Bitcoin on pizza. Oh, great. That metric that has been my absolute favorite metric to follow for the entire history of this podcast, almost 4 years now, is Bitcoin's 24-hour average transaction rate. And that's a little bit depressed. It's currently coming in at 3.82 transactions per second. And 4 years ago, that would have been great. Anything above 3.14 transactions per second was usually indicating that we were having an up week. Even though today is an up day, this is an average, and 24 hours ago, within the last 24 hours, Bitcoin was certainly tanking. So I'm not a TA guy. I don't draw lines on charts. I don't think that correlation equals causation, but I still think it's fun to look at this metric, and I would expect that the transaction volume is accelerating a little bit, although on-chain activity has been really, really peaked. At least since Friday, I've been watching it, and the mempool's it's been clear for several weeks now. It's been clear on and off, but it's been consistently clear, at least for the last several days. Of course, if we had higher on-chain transaction volume, that wouldn't be the case. Part of this big shakeup is we've seen the altcoins get just creamed. Ethereum in Bitcoin terms has just cratered. And even in US dollar terms, it's cratered. They're off more than 50% from their all-time high, which they set back in 2017 and have never retaken, not even close. So a lot of the altcoin enthusiasm, which was inspiring, those meme coins, the ordinals, even the BRC, the Bitcoin-based S coins on chain, minted on Bitcoin, not on chain, minted on Bitcoin tokens. That market is a dumpster fire. It's always a dumpster fire because they're flat out scams. But right now the market is a dumpster fire, and so I think that's fortunately probably the biggest reason that the on-chain transaction volume has looked so low. Because again, remember, traditionally up until Taproot or shortly after Taproot, anytime we saw more than 3.14, 3.15 transactions per second, Bitcoin was booming. And then when the mem chain got bloated with spam, that was more like 7 or 8 transactions per second. And as that faded away, at least for the time being, it looks like we're back to normal. And if that's the case, then 3.82 transactions per second is relatively healthy. Speaking of on-chain activity, the mempools are, as I mentioned, relatively clear. It's been over 10 minutes since the last block. Right now, it's been 11 minutes per block. So We have almost double the transactions in the mempool we did last week, but still we don't even have a whole block's worth of transactions pending, even though there should have, in theory, been another block by now. Currently, Clark Moody's dashboard is showing 2,240 transactions in their mempool, and mempool.space is showing 2,272 transactions in their mempool. That's showing that those transactions only take up about 3/4 of a block. So even if a block takes another 5-10 minutes, it's still looking like they'll easily clear out all of those transactions in the next block or two. So that's really cool, especially like I mentioned last week, I have some Lightning channels I wanted to manage. And, Lightning transactions don't take place on chain, but opening or closing a transaction does. And if you want a service to rebalance your transactions, loop out some of that money or loop some money back in, loop some Satoshis, back. Well, it is money. Bitcoin is peer-to-peer electronic currency back in. That requires an on-chain mining fee. And so that's best to do when fees are negligible, as they currently are. I think the Clark Moody's dashboard is saying that the high priority transaction should require a fee of 2 sats per VByte, but I think that's an overestimate just because we saw they were estimating on the high end last week as well, when they were estimating 3 sats per VByte, even though the previous 10 or 15 blocks in a row all included plenty of 1 sat per VByte transactions. But if you have a really, really important transaction that you need to get mined right away, an extra 12 cents to bump up your chances probably isn't the end of the world. They are saying that, a medium or low priority transaction only needs to include a 1 sat per VByte transaction fee. And mempool.space is saying any transaction only needs a 1 sat per VByte fee to be mined immediately. And that would be the case since there's not even one block of transactions pending at the moment. That works out to just 12 cents in US dollar terms, which for an average transaction, that's pretty phenomenal. To think that you have the power to send an essentially unlimited amount of value anywhere in the world. Nobody can stop you. Nobody can claw that back. Nobody can censor it. You don't need the permission of anybody to send it in the first place. You don't have to use a bank to do so. You just pick up your phone or get on your laptop and boom, it's done. It's confirmed and final within 10 minutes or so, and all for just 12 cents. Good luck sending a Western Union MoneyGram or a wire transfer for 12 cents. Since last DCA Wednesday, we had a relatively large difficulty adjustment in the mining difficulty, the difficulty that it takes to find a Bitcoin block. The Bitcoin protocol adjusts this difficulty every 2016 blocks with the idea of keeping blocks coming in at an average of 1 block every 10 minutes. Of course, they don't come in at exactly 10 minutes. That's why they take the 2016 blocks and find the average before that adjustment is made. We are currently almost halfway to the next difficulty adjustment, 1,379 blocks to go. So about 10 days. That's looking like it's going to be probably on April 19th. And currently we're talking about a decrease, as if maybe the last increase overshot things a little bit. Depending where you get your data, it'll be a decrease from anywhere from 0.07% to 1.4%. So a small decrease based on the fact that network hash rate continues to trend up and to the right, just as Bitcoin's price does. It'd be reasonable to believe that by the time we get to April 19th, we may be looking at an actual increase, if not a very, very modest decrease. Again, this really only matters if you're a miner or you're concerned about miner profitability, because the difference between where we are right now and where we are with a slight difficulty increase, we're talking just seconds. And even then, that's only in the average Bitcoin block. If you could have a transaction you send and it might take an hour until the next block rolls in. And I saw a block just the other night that took an hour and 6 minutes. Or you can have 2 blocks come in back to back within the same minute. That's just random chance. But in general, those blocks should average once every 10 minutes. Speaking of which, just last night, for example, was looking at, I screenshot this and I actually put it on our Twitter feed at BTC Bulletin Pod on X, saying, here's an example of the random nature of individual block times. The last block was mined over an hour ago, but 3 blocks ago, we had 2 in a row that took less than 2 minutes. This is completely normal. So block 89,601 was 64 minutes old at that point in time. So an hour and 4 minutes, and a new block hadn't been found yet. But if you go 2 more blocks over to 89,599, it had come in 82 minutes ago. And then the next block, 891,598, had come in 84 minutes ago. So over the span of 4 blocks, you had a block that it's going to take at least 64 minutes, another block that had only taken 7 minutes, and then 2 blocks that came in within 2 minutes of each other. Again, that's part of the genius of the Bitcoin protocol. It knows this, and other chains in the past, they had on-the-fly difficulty adjustments. And since sometimes blocks come in super fast, you would have their difficulty just get ratcheted way up, and then the next block might take forever to come in or never come in at all, and the chain dies. But then they ratchet difficulty all the way down. And so they're just seesawing all over the place, trying to maintain a stability. But by averaging 2016 blocks, which is just about 2 weeks worth of blocks, I think Bitcoin gets pretty much as good of a guess of where difficulty should be. And I think that's pretty awesome. Speaking of network security, currently the 90-day hash rate average, and this is important, we're going to get into that a little bit later, but the average over the last 90 days is 812.5 exahash. And that's up almost 10 exahash from the previous week. So the amount of computing power and the power of the ASICs getting added continues to soar as the Bitcoin network becomes the most secure. Well, it's already the most secure network ever in human history, but it becomes even more so. Now, I want to get into this is going to be kind of the same, but I'm getting ahead of myself. First, I want to take a minute to thank each and every one of you that's taken the time to listen to this podcast on your favorite Podcasting 2.0 app. My favorite Podcasting 2.0 app is Fountain. Again, they're not a sponsor of this show, but I do like the way they make it easy to stream sats, to help support your favorite podcast, to contribute some value back to the podcast for value you feel you've received from listening to the podcast. They allow you to do that by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out, a message, but it's a Lightning transaction. So in addition to sending a message to your favorite podcast, you also are sending some Satoshis along to help contribute that value back. And when we do receive boosts, we typically read them on the next episode of the Bitcoin Bulletin Podcast. And today we have another boost to read. It comes from longtime booster Leggy. Leggy sent 3,000 Satoshis. And this was for episode 210, so the last episode. It says, "Hi, Chris. Thanks for your mail. I'm celebrating the dip and the empty mempool and realized that we passed 1 zeta hash. Another word I never heard of before being orange pilled. 10 to the 21st power. Humans can't understand exponentials and the power of big numbers, especially a low IQ pleb like me." Winky smiley face. Thanks for the boost, Leggy. I'm glad you got the email. For those of you who are first-time listeners, or maybe didn't notice the end of the last, or notice the end of every podcast, I do list out the podcast email, which is bitcoinbulletin@protonmail.com. I do respond to emails that I get from listeners. I love hearing from each and every one of you. And so I do have that email open as we speak. And I communicated with Leggy via email, and that's what he's referring to. But that is pretty cool. And I just mentioned a few seconds ago that we were only in the 800 exahash range. But again, that is a 90-day average. It's kind of one of those zoom out things where you get big peaks and valleys in hash rate, but to get a really good idea of where we go up and to the right, I choose for this podcast to read the 90-day average statistic. But we have definitely, we are definitely zooming. And what Leggy mentioned by 1 zeta hash being 10 to the 21st power, that is really mind-boggling. That is 1 sextillion hashes per second. Absolutely incomprehensible number. Like the SHA-256 security that safeguards our Bitcoin, the number is just so large that it's incomprehensible. I think Leggy summed it up the best when he said humans can't even understand it, especially low IQ plebs like us, right, Leggy? So for those of you who don't know, Leggy is not he's no idiot. Speaks multiple languages and has been a Bitcoiner for a while. So thank you for the support, Leggy. As always, it's really awesome to hear from you, and I do appreciate each and every one of those Satoshis. And thank you to everyone listening to the podcast, regardless of where you're located or whether you have Satoshis to help contribute back to the podcast. Your listenership is the number one most important thing to me, but it is really cool to hear from you from time to time. So thanks again, Leggy. Speaking of our listeners, our top 10 countries where our listeners are located is as follows. As has been the case the entire history of this podcast, the number one country is the United States of America, where more than half of you are listening from. So thank you to all my fellow Americans listening wherever you may find yourself in the good old US of A tonight. But this is a truly international podcast. So number two, the second largest number of listeners come from Singapore. So apa kabar? Thank you to each and every one of you listening in Singapore in numbers sufficient enough to make you the number two country for listenership. Number three is Germany. So Dankeschön, mein Freunds in Deutschland. Number four is Argentina. So muchos gracias, amigos. Number five is Luxembourg. So again, Dankeschön, mein Freunds in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number six is Canada. So thank you to those of you in the much chillier north. I used to joke the 51st state because so many people where I live in Florida are from Canada. They spend half the year down here. So, you know, it seems they're pretty much as American as you are, or I, or not necessarily you or I, but as any other of the Americans listening to this podcast. And so I used to joke it was the 51st state. That might be a sore subject right now with all the banter going back and forth between the Canadian government and our government. But I love Canada. I love Canadians. Some of the politest people in the world. And they certainly make up a large, if not temporary, seasonal portion of the Florida population. Although I guess those of you who are down here that are getting ready to head home, or maybe they already do. A lot of the winter visitors leave right about now. Usually they like to be home by Easter. So once again, I'm getting off on a tangent, but thank you to each and every one of you listening in Canada in numbers large enough to keep you in the number 6 position in our top 10. Number 7 remains the United Kingdom. So thank you to our cousins across the pond in the United Kingdom. Number 8 remains Australia. So thank you to our friends down under for listening in numbers sufficient to keep you in the top 10 at the number 8 position. Number 9 remains Spain. So muchos gracias, amigos, in España. Number 10 remains Mexico. So hola, muchas gracias, amigos, in Mexico. And that rounds out the top 10, but we have countries, pretty much every country I can think of represented in our listenership. I can actually scroll through and it's pages and pages and pages. It's like hard to comprehend. Not quite as big of a number as 10 to the 21st power, but it's almost hard to comprehend just how many countries there are when you are looking at them on a list format like that. So that is really cool to know that we have listeners pretty much anywhere I can think of. If I threw a dart at the globe and wherever it landed, most likely we have listeners in that region. So thank you to each and every one of you from the bottom of my heart. I love talking about Bitcoin, but it would all be for naught if it weren't for you. You are what make it all worthwhile. So thank you once again. On to the news. Well, just a couple days ago, April 5th was Satoshi Nakamoto's 50th birthday. That's also 6102 day. If you don't know, Satoshi obviously is a pseudonym, an anonymous person. We have no idea who the actual Satoshi, the person behind Satoshi, was, whether it was a person or a group of people. But when he was filling out information, I guess it was his P2P Foundation profile for when he first created or first announced Bitcoin in 2009, he had to list a birthday, and he chose April 5th, 1975 as his birthday. That would make him Gen X. That would make him 50 years old. But the reason he chose April 5th is that is the day, well, we think, we don't know, but that is the day that President Roosevelt signed Executive Order 6102. And 6102, issued April 5th, 1933, was basically, it made holding gold in the United States illegal. and it ordered all persons on or before May 1st of 1933 to deliver all gold coins, gold bullion, and gold certificates to a Federal Reserve Bank branch or agency under penalty of going to jail. And of course, as soon as the Roosevelt administration had all the gold, they devalued gold, and that was part of their New Deal, which forever changed the course of the United States in more ways than one. And many would argue logically prolonged the Great Depression from what would have been maybe an 18-month business cycle correction to the Great Depression. But I digress. A fitting day for Satoshi Nakamoto to choose as his birthday. So happy belated birthday, Satoshi. And it's good to see Gen X representing. I joke because people usually think of Bitcoin as something for the kids, teenagers, 20-somethings, maybe Zoomers and millennials, and they joke about boomers. But you look at the people who created Bitcoin. Of course, Satoshi said he was 50. Hal Finney was older than that. All the people that are cited in the white paper were all solidly Gen X, all solidly in their 50s or their 60s. So Gen X is definitely represented in the cypherpunk movement and in the Bitcoin movement. Of course, the major news in Normie land, and even amongst a lot of plebs, is the price of Bitcoin. Last DCA Wednesday, we talked about the wild price ride because of the speculation that Trump was going to impose tariffs. Of course, this week, the story was much the same when Trump did impose.
Bluetooth connected.
Huh. I didn't have anything connected to keep trying to turn off Bluetooth on my soundboard because I think it keeps trying to connect to my phone. All right. Where was I? So basically Trump had his liberation day where he went ahead and he imposed tariffs. And of course, every TradFi talking head was forecasting gloom and doom. When we did see the stock market tank on Friday, and a lot of people were talking about maybe this is when Bitcoin uncoupled because Bitcoin stayed relatively flat. And then over the weekend, we had almost every TradFi talking head predicting that Monday was going to be a repeat, or maybe even worse than Black Monday in 1987 when the stock market crashed, with the Dow dropping more than 22% in a single day. Of course, that didn't materialize, but since Bitcoin trades 24/7, it tanked in advance. And so Bitcoin dropped as low as $74,400 US, depending where you get your data. Of course, Monday, the stocks did not repeat Black Monday. And Bitcoin rebounded a bit as well. And then Tuesday, we had a little more tariff drama. And then finally today, things turned positive with Donald Trump announcing that he was doing a 90-day pause on any country who hadn't retaliated against the United States tariffs. So now we're back to the lower 80s where Bitcoin finds itself currently. So a little bit of drama, but if you zoom out, if you never looked at the Bitcoin charts, you listened to this podcast last Wednesday, and then you didn't think about Bitcoin again until today, and listen, Bitcoin's exactly the same. Bitcoin's flat. You'd be poking it with a stick saying, come on, do something. At least part of the Bitcoin sell-off, and I alluded to this in the intro, was related to the estimated $600 million in long positions that were liquidated in a cascading event during the sell-off. We see that in any major big sell-off. You get the Bitcoin starts to drop, and then it drops to the point where people get liquidated, and that liquidation causes the price to drop even more, and then that hits a level where even more people get liquidated, and it just runs until they're basically out of liquidations, and we find a bottom. And so we saw a heck of a lot of that happening today, or not today, but in this event. And of course, the moral of the story, the big lesson here is you shouldn't be a degenerate gambler. You should not buy longs and shorts. This is not financial advice, but it seems a little obvious to me that you should buy the underlying asset. You should stack sats slowly and steadily. I think this podcast over the last 4 years has shown that dollar cost averaging is a pretty solid strategy. We're doing a heck of a lot better than had we just YOLO'd all in. And first of all, we wouldn't necessarily have had the money that we've put into Bitcoin for one lump sum all the way back in 2021. But even if we did, and we'd YOLO'd it all in, we'd still have fewer Satoshis, less Bitcoin than we have now by doing DCA. So slow and steady wins the race once again. Of course, this is the cycle where we always talk about institutional adoption and Wall Street money pouring in. And this is the cycle that's really the case. We all know who Larry Fink is. He's the CEO of BlackRock. And on Sunday, we had Larry Fink come out and warn that he thought that that Bitcoin could end US dollar dominance, hinting that Bitcoin could one day challenge the dollar and become the world's reserve currency. Well, no kidding. We've been saying that since 2009, right? Maybe not in this podcast, but Bitcoiners have. That's the whole point. All fiat monies die eventually. And he says that it's because of the turmoil, and he related it to inflation fears and tariffs, blah, blah, blah. But I mean, the long and the short of it, this is inevitable. But now we have one of the most powerful money managers on Wall Street, one of the largest money managers in the world, putting two and two together. And he might be issuing it like this is a warning that something we could stave off, but he knows it's coming. I mean, he might be in denial and think that it might not happen, that we could stave it off, but at least he sees that that's where we're headed. And that's a huge change from where we were 4 years ago. I mean, if you had told anybody that you thought that the CEO of BlackRock was going to come on the media and tell everybody that he thinks the US dollar is at jeopardy of falling to Bitcoin, that Bitcoin could easily become the world's reserve currency, you'd say, dude, that's some hopium. Smoke some more, bro. Speaking of Wall Street giants, Fidelity came out and said that they believe that Bitcoin is entering an acceleration phase of adoption and price growth, citing institutional investment and ETF inflows, even as short-term market turmoil persisted. So another sign that the Overton window has firmly shifted, that Wall Street gets it. The money might not be there en masse yet. There might be only, MicroStrategy and a few other companies. There might be only maybe one or two pensions that are dabbling their toe in Bitcoin, and they might be talking about 1% allocations right now, but the dam is cracked. And when the dam cracks, it will fail eventually. And when the dam cracks, when the fiat dam cracks, and the wealth of the world that's stuck behind it comes roaring out, it's going to pour into Bitcoin. And Wall Street's starting to get it. Larry Fink gets it. Fidelity gets it. I'm going to skim past some of my notes here because I'm a little short on time. I got a much later start than normal. I've been working really hard at my fiat mine, something I want to announce in the not too distant future when I'm a little bit closer, but I've been working overtime, double time, long hours in my fiat mining business, and I'm trying to integrate Bitcoin in there in a tantalizing way too. So maybe I'll be talking about that in the next week or so. That would be really cool. But in the meantime, here we are running up on the deadline to get this purchase made and this episode out. So I'm going to have to breeze through a lot of this, and a lot of these notes I started taking right after last DCA Wednesday, and it seems like it's the biggest news of the week. But then a day comes by, and all of a sudden it's moot, right? Like you could be talking about the great Bitcoin crash, but that just got erased. So more news about Fidelity and their IRA, and they're allowing extra ways to allow Bitcoin investment. Then we've got MasterCard moving to enable Bitcoin payments, with finance feeds running the headline. MasterCard and Kraken partner to enable crypto payments at over 150 million merchants. The article goes on to say, in a major move set to expand the utility of cryptocurrencies in everyday life, MasterCard and crypto exchange Kraken have announced a strategic partnership to enable crypto payments at over 150 million merchants globally. The initiative marks a significant milestone in integrating decentralized finance into mainstream commerce, with a strong focus on accessibility for users across the UK and Europe. This collaboration, through this collaboration, it's a crab market, now we have corrabolations. Through this collaboration, Kraken users will be able to spend their digital assets, including Bitcoin, Ethereum, and others, at any merchant that accepts MasterCard. The move is designed to offer a seamless way to use their crypto balances through physical and digital debit cards linked directly to their Kraken accounts. Another headline from Business Insider was Inside MasterCard's plan to build the Venmo of crypto. I'm not going to read that one, but the point is, I think it was just last episode I mentioned that how just 4 years ago, we had all these banks and all these companies that had hired huge Bitcoin teams to build out their own Bitcoin infrastructure to launch Bitcoin products. And then, of course, we had SAB 121 and Operation Choke Point 2.0 that just put the kibosh on that. But, that work had been done. The legwork had been done. the proposals had been made. They were getting ready to launch these things, and so it seemed logical that as soon as the rope was untied, and it has, SAB 121 was rescinded, and we obviously have a much more Bitcoin friendly administration currently in office than we did when Elizabeth Warren was looking at maybe being the next Secretary of Treasury. I remember she had her anti-crypto army and was fiercely anti-Bitcoin. So here we are in a completely different world. All it took was the transition of power one day, January 20th of this year, and the light switch flipped. And so I think that's an example of this, where MasterCard and Fidelity had initiatives ready to go, and now they're rolling them out. And I think we're going to see a lot more of that in the coming months, maybe the next 6 or 7 months, but certainly within the next year. The dust is being blown off, and the joints are being relubricated, the squeaky wheels are being oiled, and we're going to see a lot more of these products launching in the near future, and that is really cool, and that's a big deal. Again, that's another story about the Chicago Board of Exchange is getting ready to launch Bitcoin index futures. They're not really super big news. I think they mentioned that about a month ago, but they're getting ready to go live on April 28th. So again, that's cash settled Bitcoin futures. But again, it's just one more sign of Bitcoin being mainstreamed, of TradFi. First we had the Bitcoin ETFs. First we had the Bitcoin spot, the Bitcoin futures ETFs. Then we had the Bitcoin spot ETFs trading in the New York Stock Exchange, and now the Chicago Board Options Exchange is getting ready to launch their own products here in the next couple of weeks. And it's just one more domino continues to fall on our way to hyper Bitcoinization. So whether you care about the minutia or not, it's the trend that we're talking about here. And the trend is extraordinarily bullish, which is why it's really amusing that Bitcoin isn't already 250, 500,000, but price discovery takes its time. In a normal cycle, we would not have even probably seen Bitcoin eclipse the previous all-time high now. Usually it's a solid year after the all-time high before Bitcoin makes a new all-time high. This year, that wasn't the case because the SEC got sued into submission, and we had the ETFs launch, and that was a tremendous pump. And we saw Bitcoin break its all-time high again before the halving. So we came into the halving at an elevated price. Then, of course, we had the Trump election pump, and those were all pumps. And so there was a good reason why Bitcoin pumped. But anytime you have a little mini euphoria phase, you expect a little bit of a retracement back to the mean. The mean is still trending up and to the right. But normally that up and to the right trend would really just now be accelerating. On a normal cycle, we would just now be maybe where we're at right now, just recently having eclipsed the previous all-time high, maybe even lower. Maybe we just be at 69,000 right now. Again, it wouldn't be till this summer, as it was in the 2017 cycle, for example, that up and to the right curves into an almost ballistic straight up trajectory. And I firmly believe that's still going to be the case. Only time will tell. Nobody has a crystal ball, but I have conviction that it's really, really going to get rolling. Maybe July, August to September. And then, of course, have that blow off top, maybe October, maybe as late as November. But I believe each cycle, because the blocks have been coming a little faster than the 10-minute average. So the halving has moved about two weeks to a month earlier every halving. So it would make sense that the peak would be the same number of blocks from the halving, but that might be a month earlier. So in 2017, the peak was in December. Then the 2021 all-time high was in November, and then so maybe it'll be October this time. But the point being, it's in the future. It's yet to happen. It's still coming. One final note before we move along, and that is, we all know who Jim Cramer is, the host of Mad Money, who is also the inspiration for the inverse Cramer index, where whatever Jim Cramer says, the exact opposite happens. He's a bad luck omen. If he endorses Bitcoin, Bitcoin dumps. When he says Bitcoin's never going to hit $100,000, that's right before Bitcoin hit 100,000. So if you're familiar with the store Costco, the membership bulk purchase club in the United States, like Sam's Club, but the original, one of their things that they're infamous for is they've got the snack bar. And in the snack bar for $1.50, you can get a foot-long hot dog and a drink, a soda, like a Pepsi or whatever. And that has been the case since they started in the 1980s. And the CEO was infamously famously quoted as saying, basically he was going to kill anybody that tried to raise the price of that hot dog, that was set in stone, that the price of the hot dog was never going to change. And Costco has taken, they've bought hot dog processing plants and brought the supply chain in internally. They've done all kinds of things to keep the cost of the hot dog down, but they're losing money on the hot dog still. But they don't care. They lose that, they make barely any profit on the things they sell. They lose a little bit of money on the hot dog, but they make money in their membership fee. And so they're good with it. And they want to stick with the $1.50 hot dog. But Jim Cramer on Saturday apparently was at Costco, and he tweeted out a picture of the Costco snack bar centering on the menu where it shows the $1.50 hot dog. And he says, "Some things never change." Damn it, Jim. Now you've gone too far. You couldn't just leave well enough alone, could you? If you've jinxed the $1.50 Costco hot dog, it's pitchforks and torches time, because some things you just don't mess with, Jim. Of course, that's tongue in cheek, but man, if Jim Cramer being a jinx comes true, like the $1.50 hot dog at Costco's days are numbered, and that sucks. It's always a good, cheap, unhealthy meal when you're out shopping. All right, on to what makes today an every Wednesday special, and that is Wednesdays are DCA Wednesday, Dollar Cost Averaging Wednesday. If you're new to this podcast or you don't know what dollar cost averaging is, well, DCA is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, we set our equal portion at just $20 US. Now, I did this because I've often said that you shouldn't invest any money in anything, Bitcoin or anything, that you need to pay your mortgage or your rent or buy groceries next week. It should be money that you could just take and make disappear and pretend like it's gone forever and just set aside for your future. And as such, I chose an amount that was small enough that almost anybody listening to this podcast should feasibly be able to come up with on a weekly basis. I also wanted to show that even if you only have $20, you're not too late. That it's not hopeless. A lot of people think if I missed the boat, if I don't have $100,000 to put into Bitcoin, why bother? And I wanted to show that even at just $20 a week, you can build an appreciable stack of Bitcoin. And we've shown that. You already have a tenth of a Bitcoin if you've been following this show and only stacking $20 a week. Of course, we chose weekly as our regular interval, once a week on Wednesdays. But that's also a you do you thing. Most people that invest in anything do so on their payday. So if you get paid every other week, maybe you DCA bi-weekly, every other Friday when you get your paycheck, whatever. That's a you do you thing. But the point is, you pick an amount, you pick an interval, and you stick with it. And the idea is that time in the markets beats timing the markets every time it's tried. And we've proven over the last 4 years that is the case with Bitcoin as well. This is now going to be our 194th weekly stack. We started all the way back on Wednesday, July 28th, 2021. So coming up on 4 years now. And during those 193 Wednesdays, we converted a total of $3,860 US. Now think about that. If you're a person where $20 is a lot of money and you're struggling to come up with to buy just $20 worth of Bitcoin, over time that grows fast. So just in the time this podcast has been around, we've stacked $3,860 US into Bitcoin, something that was a heavy lift if $20 is the amount of money that you can make go away, right? That you can just tuck away for your future. But it adds up fast. So we've converted that $3,860 US into a stack of 10,547,717 Satoshis. And we've done so at an average cost of $36,595.60 per Bitcoin. Obviously, we don't have a full Bitcoin, but you get the picture. Bitcoin's currently worth about 82,000 US. So we paid less than half by not trying to time the market, by not YOLOing in, and by not FOMOing in, by not panic selling and trying to rebuy later. So again, I think that proves what I was trying to set out to prove. If we had purchased on the very first DCA Wednesday, Bitcoin was almost 40,000 US. So certainly we'd have a lot less Bitcoin. And if $20 is all you can afford to convert into Satoshis, you don't have $3,860 to YOLO in with anyway. Maybe you would have YOLO'd in with 500 and then done that 6 times. And then your average price would not have been 40,000. It would have been significantly higher. So DCA for the win once again. To grow the stack, I always use the Cash App. Not a sponsor of the show, maybe not even available where you're listening, but I like Cash App for small purchases because it's really easy to buy Bitcoin. You don't have to have your money on Cash App and they'll still let you add it and immediately convert it to Bitcoin and immediately transfer it out. Things that most exchanges won't let you do. They do charge a slightly higher fee. It's like 2.25%, which is outrageous compared to some of the larger exchanges, but that's only going to be about 45 cents for a $20 purchase. And hear me out. When I transfer that to my hardware wallet, even though I'd only pay about 1% or less than 1% on Coinbase, when I send it to my hardware wallet, they charge you that mining fee. And they're not just going to charge you the 12 cents that we were talking about as the average mining fee right now. Last time, I think it should have been about maybe $1.40 when I was transferring some money for a family member that I Uncle Jim for from Coinbase to their hardware wallet. And on-chain fees should have been about $1. No, I think it was $1.20, but Cash App charged them $7.50 because they always charge too much. So we're not going to pay anything because Cash App doesn't charge you as long as you're willing to wait and not they have a tier where a priority transaction they guarantee will be sent immediately and they charge you for. But if you're willing to wait, they say up to 24 hours, they'll let you do it for free. And I don't mind waiting 24 hours for Bitcoin to go to my hardware wallet for free because it's going to me. No rush. I know it's going. But B, it's never taken more than about an hour at the longest. Normally, when it's slow like this, it maybe takes 2 or 3 blocks before they send it. And to be able to do that for free, even though we're going to pay 45 cents for the transaction, we're not going to pay $5 to Coinbase to move it. So I think that comes out in the wash. Again, this is a you do you thing. They're not a sponsor. Use whoever you feel like using as long as it's a reputable exchange. Just make sure it's a reputable, known exchange and that you get it off the exchange and into your own custody as soon as practical. So I have Cash App open. This week I have $20 because I was buying the dip all weekend. I don't include that in our stack because, I don't want to taint the numbers. I want to show the power of dollar cost averaging, but for my personal stack, I buy the dip and hopefully you're doing that too. And if you have been, you're sitting on a lot more than just 10 million Satoshis. But for the purpose of this podcast, we're just solidly focusing on DCA. So I've got Cash App open. I already have that $20 on Cash App. So it's just a matter of tapping Bitcoin, tapping buy. Now, sometimes Cash App will let you just tap 5, 10, 20, 50. This time it's 5, 10, 25, 50. And I'm not going to invest 25. So I have to manually enter $20. Hit send, hit confirm, and boom! Just like that, we've added another 23,774 sats to our stack, which makes me happy because, as you know, when Bitcoin was over 100,000 US dollars per Bitcoin, we were getting less than 20,000 sats. I think we stacked as low as at least 18,700 sats on one of those stacks. And it's just nice to get more sats. So we got about 5,000 sats more than we would have gotten if Bitcoin was back in the low 100 range, significantly more than if Bitcoin were setting new all-time highs. That brings our current stack of sats to 10,571,491 Satoshis and raises our average purchase price by about $100, $106.89 now. So our new average cost basis is $36,702.49, which is still dramatically less than the $82,234 per Bitcoin that we just paid to stack. And for those of you who are still trapped in the fiat matrix, when Bitcoin does return to 100,000, which I think it will do sooner rather than later, maybe this week, maybe not if we get more drama and the normies panic again, but it will. And when it does, our current stack, even if we don't do another DCA Wednesday, would have a US dollar fiat value of $10,571.49. Not too shabby considering we've only converted 3,860 US dollars at $20 a whack into those Satoshis. when, not if, but when Bitcoin hits 1 million US dollars. Plenty of people think that'll happen this cycle. I think that's probably optimistic, but you never know. If we do reach the point of no return and we really get that corporate nation state FOMO going, it's distinctly possible that Samson Mao's prediction of that happening this cycle or this year will happen. If it takes another cycle or two, that's fine with me. But when it eventually gets there, our current stack would have a US dollar value of $105,714.91, a hell of a return for less than 4,000 US dollars. Now, Adam Back has a prediction of $10 million Bitcoin. And when that happens, our stack will be worth more than $1 million, $1,057,149.10. Of course, back in 2022, Fidelity's director of global macro said that they believe that one Bitcoin will be worth 1 billion US dollars by the year 2038. I believe they even said that was in inflation adjusted terms, but who cares at this point in time unless it takes $1 billion to buy a sandwich. If Bitcoin hits Fidelity's target of $1 billion by 2038, our current stack would be worth $105 million. In fact, $105,714,910 US dollars, firmly ensconcing you in the you didn't do anything to deserve that, you just got lucky category of all those early adopters that people are so jealous of, and definitely life-changing money for anyone I know. I don't know Michael Saylor personally. I do know some people that are really well off, and not a single one of them wouldn't have their life radically changed for $105 billion. Of course, most importantly, it means that we do end up in a Bitcoin standard that you were in the upper echelon of society, net worth wise. Not a better person than anybody else, but more financially secure than the average person who, it's been estimated, will only be able to have anywhere between 100,000 to 200,000 Satoshis, depending on how many are lost. And here we're sitting at over 10 million already, almost more than 10x, almost 100x, well, 50x, what the average person will ever be able to hope to achieve when we finally do hit hyper-Bitcoinization. So putting those fiat numbers aside, when Bitcoin becomes the global reserve currency, if you've been stacking alongside us in just the last almost 4 years now, you've already secured your future if that's the case, and your family's future. I mean, we're talking generational wealth. That's really freaking cool considering we've stacked converted less than 4,000 US dollars into Bitcoin. Before I go, I want to ask you to help feed that algorithm monster by making sure you're following this podcast on X. On X, we are at BTC Bulletin Pod, at BTC like Bitcoin, Bulletin like Bitcoin Bulletin Pod, and podcast like short for pod, at Bitcoin Bulletin Pod. The more followers we have, and we don't have that many, the more likely people will see our posts, and the more likely they are to find out about the podcast. And maybe simply by clicking follow, you'll help orange pill somebody who thought they're too late, or thought that I've only got a couple $100 to convert to Bitcoin, so it's not even worth it. And they can listen to this podcast and realize that they're wrong, and maybe get off zero. So you can help a fellow newbie just by helping feed that algorithm monster. Of course, I also love to hear from you. I like the boost. That's really cool to know you appreciate this podcast enough to help send value back in the form of sats. But I understand not everybody can part with Satoshis. The main thing is I just love to hear from you. It's nice to know who you are or where you are. You can be a NIM, anonymous, but I get the idea if you send a personal note. And my DMs on Twitter are open, and I do respond. I haven't really gotten too many scam requests on X yet. I don't respond to those, obviously, but I respond to every pleb. Of course, if you don't use X, you can always send me a good old-fashioned email, as I spoke about earlier in this podcast. The email for this podcast is bitcoinbulletin@protonmail.com. Again, bitcoinbulletin@protonmail.com. But of course, don't forget to join us every Wednesday as we continue to grow that stack, as long as people are silly enough to part with their precious Satoshis for worthless paper money. But regardless of whether you're dollar cost averaging alongside us, or whether you're buying more frequently, or whether you haven't gotten off zero yet, the one thing that matters is that you just keep on stacking those sats, you sexy sat stackers.